I'm here with Jim Cramer to talk about these markets. Jim, you called it yesterday when you and I talked. You said you didn't trust the rally.
No.
Do you trust it today?
Look, I think that the market is went down a lot again, so you've got some real accidental high yielders, and Eaton comes in at 4%, GE is at 4%, Verizon at 5%. I like these on the way down. I like Procter on the way down, so you have 4% yield. So I'm looking at individual stocks. I don't like a market that opens up big. It took up a lot of stocks, and you could have sold the oils, which was terrific. You have to use these up openings where the futures take up all stock to get out of the junk, and with the exception of a couple of oils that I've highlighted from Action Alerts, I don't like those. That was a great opportunity. Minerals and mining, great opportunity to get out. The Caterpillars of the world, great. So you have to use these up openings to get out of the stuff that doesn't work, including China. And then when it comes back down, as it's going to come back down, you get into these accidental high yielders. That's how I want to be in it. Mark Sebastian, our VIX guy for Real Money, saying, listen, this is just a horrible market. Bruce Kamich, our fantastic technician, is saying, look, this is absolutely not the bottom. We have September. But if you buy these stocks that yield 4, the best thing that happens is they might yield 5 when you buy more. So that's what you got to focus on is individual stocks and dividends. Focus on dividends. That worked in 2008. It'll work now.
Jim, when might we see this end? When will we get to a period where you like the market?
You need the Fed either to raise rates and get it over with, and then you got a quick 3-4% drop, which is like what would happen in 2011. That would get us the 2011 decline that I've been looking for. I'm using 2011 as an analog. That was debt ceiling, and then the pigs almost going broke. You talk about Italy, third largest bond market, and Ireland and Portugal and Greece, and can that in Spain? Can that happen again? Yes, that's what I'm using, the operative market. You have to get through September, which is historically bad month, where the S&P is down 1%. Well, this is the worst August, so I don't know how much more it can go down. And then what you really need more than anything is you got to see this dollar stop going higher, and the dollar's going higher again, and that's a nightmare. You can't have the dollar because that means estimates have to come down. So it's really important that we get that combination. China, I'd like to see that index down to 2,200 where it was last year, this week. Many of the companies that I've looked at there, I don't want to call them phony, but they literally have either no earnings or sell at 100 times earnings. Don't touch anything China. Use every lift in China to go.
All right, Jim Cramer, thanks so much. I'm Rhonda Schaffler for TheStreet.